What's going on, everyone? Welcome to the Geeky Investor, where stocks talk and we translate. Today, we're going to be discussing why the market is crashing very heavily, especially in the AI sector, and we're going to see a few examples of those stocks that are crashing heavily. And we're going to discuss in this video why these stocks are crashing and what's the sentiment in these AI stocks, and if in the future what you have to do to avoid these type of issues. So please make sure you stick till the end of the video because it's really going to be an informative one, and make sure you smash the like button because it really helps the channel grow larger. So to begin with, we're going to see a couple of examples of companies that have crashed over the last day on Friday. So we can see here AMD, for example, or what they used to call advanced money destroyer, has lost 4.8% from 220 to $210. The same goes for Nvidia. It lost 3.2%, and then the same goes for Broadcom, but that's a very steep decline here, so by 11%, reaching down to $360. Although in the past couple of months we can see that Broadcom has actually gained money and has actually gained a price on its share price, but the stock has tumbled by 11% on Friday. The same story also goes on with Oracle. We can see that their stock has tumbled at one point by 5%, but then it recovered, ending at $189 on Friday. So what is happening to these stocks? What's happening to the AI sector? Why are they crashing? And is this a buying opportunity? So we're going to discuss first Broadcom. So Broadcom has tumbled 11% despite blockbuster earnings. CNBC goes on here to say that, despite the results being really good and the Q3 2025 earnings call, they were not enough to keep investors from rushing to the exit. And this is because, there's a significant margin hit in the short term due to its costs building out. So what's happening is basically Broadcom has partnered with a couple of companies, and they are building things into the future, but they will have to pay a lot of money in the current time because they want to build things in the future, and we're going to see what things are exactly. And because they are paying a lot for the future, their margins are going to take a hit right now, and that's why investors were thinking that this is kind of worrisome for the time being. Let's get out of the stock, and the stock tumbled by 11%. The article goes on to say here that one concern among investors that margins are coming down, at least in the short term, due to higher upfront costs. So we know that the CFO said on the earnings call that the gross margins will be lower for some of the Broadcom's AI chip systems because the company will have to buy some more parts to produce the server racks. So it all goes on to the server racks. So you're gonna have to buy these parts to go for the server rack, and then in the future you're gonna make money from that, as Broadcom is saying. But since they are paying the products and the types that they need to build for the future, their margins will take a hit, and that's why the company was tumbling by 11% on Friday. And actually we see an interesting story here. This was in September, but I'm going to raise this up right now because it's pertinent to why Oracle stock has tumbled by, not just 4% on Friday, but actually, if you see, from September, it peaked on September 10th with $328, while now it's sitting at $189. That's a decline, or a decrease of more than 40%. That's almost half the share price. So that's a significant decrease over the last just couple of months, and that's because, as we can see here, we can see here that Elon Musk has briefly lost the title of the world's richest person. That was back in September to Oracle's co-founder Larry Ellison, and Larry Ellison's net worth has actually jumped to $380 billion. But then what happened is that, there was a surging demand for the data center capacity from AI customers. But then we can see that why Oracle is actually dropping since that peak. We can see that from the article on Yahoo Finance over here. So Oracle has made 300 billion bet on OpenAI, and now it is paying the price. So what is happening is that, Oracle has a lot of expected revenue in the future over the couple of years coming next. Almost $480 billion expected with revenue for Oracle over the couple of years that are coming. But what is important is that 300 billion out of those 450 or 480 billion are all coming from one customer, which is OpenAI, or the founder of ChatGPT. So as we can scroll down right here, so Oracle stock has tumbled 40% from the September peak as Oracle's second quarter results failed to assuage a key concern for investors that the company is too heavily reliant on OpenAI, and that's what's happening. So Oracle's AI-fueled growth outlined its Q1 2025 sent the stock a record September 10, briefly making its founder Larry Ellison the world's richest person on earth. But then what happened is that the company told investors its remaining performance obligations. This is the key word here, RPO, remaining performance obligations. Basically, it is the value of future revenue from customers and contractors who signed contracts. Had nearly soared to $455 billion. So basically, Oracle is expecting $455 billion in the future, which is, you're going to say, you know, that's very nice, that's good, let's invest in the company. But what's happening is that 300 billion from these 455 billion are all coming from OpenAI or ChatGPT's owner or developer. So that accounted for a significant number because the customer's commitments as part of the Stargate project. So that's you know, a very big bet on one company to be really reliant. So it's kind of, you know, Oracle's future is mostly related to the success of OpenAI. And you know, OpenAI is already seeing a lot of competition. We can see from Gemini, from Google's AI search engine, is that it is, you know, facing competition, and that's why it's going to be hard to maintain that. So rising concerns about AI are mounting costs, and clearly there has been a reversal in terms of market perception of OpenAI in the last couple of months, and that's actually why we see AMD over the last month, it has lost almost 15%. Nvidia, the same goes for Nvidia over the last 1 or 2 months, if I recall correctly. Yes, as you can see from October, it has lost around 13 or 15%, so the same as AMD. And what's happening here? The idea is, you know, people are thinking a lot of these companies, partially their future is tied to OpenAI or ChatGPT, which is just one customer, which is really worrisome. But that's even more worrisome when it comes to Oracle, because, you know, 300 from 455 billion is all coming from one customer. And that leads us to a lesson that I really want to tell you. But before I do that, I want to read here. Oracle has also substantially hiked its full year capital expenditure to forecast 50 billion from 35 billion. And that's why, you know, people are seeing a lot of payments right now, the same as Broadcom. So the margins are going to take a hit. You're heavily reliant on one customer. That's why the stock is dramatically decreasing. But what we need to learn here as investors before investing in any company, please make sure you know this. Which is really important. I wrote it here, so let's read this. While the company is claiming, and the company here, I mean Oracle, is claiming that it can easily redirect itself to multiple providers, the company is mainly working as a B2B rather than B2C. So basically business to business rather than business to customer or business to consumer. So there are contractions and initial investments that the company cannot move easily from. You know, it's not easy to go from one customer to the other. And that's why when looking at these companies, this is the lesson of our video right here. So I'm going to zoom in. So always keep in mind that a company has to have many channels to sell its goods. So that's important. For example, when we see AMD. As you can see, AMD, if you look at this, this is from AMD's financial results on the Investors Relation official website. And as you can see here, the gaming segment. So we're looking at 2023 Q3 and then Q2 2024 and then Q3 2024. And as we can see, the gaming segment has been facing a lot of decline over the last year. So from 1.5 billion all the way to 460 billion. So that's almost 1/3 remaining, with 2/3 kind of lost. And what AMD did is that they compensated that, as you can see here, with the data center revenue. So the revenue jumped from $1.5 billion to $3.5 billion. That's more than 2 times increase, or that's doubling of the revenue that they were having from data centers. So although one thing went down, but the other went up, so that kind of helped lifted the overall revenue of the company not to decrease year over year. And that's really important for us to keep in mind, you know, when investing in one company. You have to remember that the revenue and their customers don't come from just one customer or one place, one geopolitical area, because they are going to be heavily reliant and are going to be susceptible to a lot of alterations and issues that could happen along the way. So you have to have multiple customers across multiple regions, multiple sectors, so that if one goes down, the other can sustain the company before the first one can go and improve back again. So here you can give the example of AMD, which we're talking about here, that it turned the growth to shrink, from growth to shrinkage in the gaming segment. Yet the bottom line of the company, although it took some hit, but it did not make the company go bankrupt or have a significant decline, because guess what? The data centers were carrying the company, waiting for the other segments to recover. And once again, the data center segment also took hit because of the Trump banning, which happened in 2025 Q1 Q2. But then these companies, they were selling to China. The gaming segment shined back up again and took the company to safe shores. So again, the gaming segment was going down, data center up, data center down, gaming back up. So kind of helping each other and balance things out. So one last thing before I end this video, you guys have to remember, don't invest in any company that just claims that they're going to make a lot of money in the future if they don't have actual signs of them able to deliver this. So please make sure you read on the stock, you read on the company before you make your investments, and please smash this like button because it really helps grow the channel larger. And see you on our next video. Bye bye.